Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. And for those of you that's always supporting me, salute. And for my patrons, double salute. I really appreciate it. Now today's video, we're actually going to be talking about SBA new loans, okay? And the reason is a lot of people, they are hearing about people getting the PPP loan, tens of thousands of dollars, then it's being forgiven, and then people are like, well, how come I can't get a loan? And then they're trying to get the EIDL loan and they're being passed up over this. And so they're trying to figure out, okay, what's up with the SBA loan? Well, I'm going to break some of this down. Also, not only the SBA loan, but I'm going to show you as a new startup, there are other companies out there that if you like a subprime borrower that has a business that you're starting that's generating at least a little income, that these here lenders may be able to help you as well. Now, understanding about SBA loans and why banks, they really don't like them because it's too much red tape. So we're going to be talking about that and some of the loans and why sometimes it may not be the best thing to get an SBA loan, but at least I'm going to give you the 411 so you can decide if an SBA loan is good for your business model. Now, let's understand there's 5 types of SBA loans, right? So you have a SBA micro loan, then you have the SBA 7A loan, then you have the community advantage loan, then you also have the express, and you have the CDC 504 loan. Okay, so you have 5 different types of SBA loans. Now, understanding that most people have had established businesses, but at the same time, SBA turned them down. Even they had an established business, and they're trying to understand why. Well, here's something that a lot of small business owners are not even aware of in terms of what credit bureau the SBA uses in order to determine if you qualify for their loan, all right? And so here it is. They use FICO. They use FICO Small Business. Okay, they use FICO Small Business Scoring Service. Okay, that's right. They use their scoring service. Now, you're like, well, how do I get a credit score for the SBA? Here's something you need to understand. All right. Now their scoring go anywhere from 0 to 300, right? Now, remember I told you guys, whenever you're considering starting your business and everything, to fund it out of your own pockets, well, there's a reason that I continue to tell you guys this. If you ever see, I tell you to open up a personal account, a business account, see if they offer secured cards, especially if you have challenging credit, and offer secured loans. Now, when you open up that business account, I encourage you to put money in it weekly. All right, the reason that I tell you to do that, because this activity is picking up. So sometimes it may not report to Equifax or Experian. It may report to FICO Small Business Scoring Service. So you have to understand that the reason I'm telling you this is so it can help you build up your business credit without having a paydex score, without having to buy unnecessary vendor credit like net 30s and net 10s and stuff. I'm not saying there's anything wrong with it. Sometimes they're great, especially helping you build a business. But for most of the time, when you're trying to get funding, it's always better to build a relationship with the financial institutions. That being said, let's talk about some of these financial institutions that actually the FICO Small Business Scoring Service picks up this information. So you have Key Bank. So if any of you guys use any of these banks, put a comment below If you're using these banks for your businesses and stuff like that, put a comment below. Let me know, have you seen this show up on your business credit report? Also, if you're trying to figure out how do you pull your business credit report, I'll put a link below so that you can actually pull your business credit report so you can actually see what's going on. All right? So that being said, you have Key Bank. We always talk about US Bank. You have PNC. And this is just a few of the financial institutions, okay? So RBC. So don't think that, oh, my bank isn't on it. No. They have over 1,500 financial institutions that is pulling this data, that's reporting it to the FICO Small Business Scoring Service, okay? And so that's what the SBA is looking at. So that's the reason I continue to tell you, when you start your business, Linda, listen to me. I'm very passionate about this, and so that's the reason I continue to tell you, when you start your business, make sure that you start making weekly deposits. If you don't understand how to properly structure your business, click the link below and set up a consultation with Three-Way Funding. We'll help you, okay? But it's very important that you understand how to properly structure your business and how to properly start funding your business on your own. All right, and so we actually break that down in a consultation. All right, now let's talk about some of the main loans for new startups that I think would probably be more beneficial. All right, all 5 of these are great, but as a startup, I would say the easiest ones you're going to be talking about is your express loan and your micro loan. So let's talk about the express loan, okay? Now, here's the situation with the express loan, all right? It's term loans and lines of credit. One of the things I always continue to tell people is go for the line of credit. The reason I tell people to go for the line of credit, or if you can get approved for the line of credit, because you can pay it down and use it again. Pay it down and use it again. That way you don't have to always worry about them pulling your credit. And yes, in terms of like with the SBA, they do have a personal scoring rating as well, okay? Now here's the thing about it, with some of these you still may have like a 5, maybe a 5 something, maybe a 575, 585 or something like that, and they may still give you the loan, but also there's other factors that may determine whether you get the loan. It may be your years of education, your years of experience in that type of business. So if you have at least 2 years of experience in that type of business, that in itself may trump your low credit score to help you get approved. And most people don't know that. Again, this is why a lot of financial institutions, because it's so much red tape, you know, they're like, oh, why don't you do this? That's the reason I tell people with financial institutions, you always want to start with a business credit card. Then between 6 to 9 months you using a business credit card, then I will go for a line of credit. Going for a loan is the last thing you want to do. Again, because financial institutions, they want to see you at least have 2 years of business. But with SBA new startup loans, like I said, you may have the experience but don't have the credit score. You may have collateral that can leverage to help you get a loan. All right? So there is some pros and cons to an SBA loan for a startup, but at the same time, you still should understand the process. And here's something what I mean about financial institutions. Okay, with financial institutions, like with an SBA loan, SBA Express loan, they may approve you within 24 to 36 hours, right? That's good, right? Here's the thing, a financial institution, they may still take up to 2 weeks to a month to get that money to you. Again, because it's so much red tape. So that's the reason, you know, it's out there, but they really don't encourage it. They really do not like issuing SBA loans. Your best bet if you're trying to get an SBA loans is to try to go through Community Development Financial Institute. Axion is a good one. And I'm going to talk more about them because sometimes they will screw you over, Axion. Alright? But at the same time, they are a non-profit that helps people, especially go through the Community Development Financial Institution. If you're a startup and you're trying to get an SBA loan, this is where I would go. I would search out one of them, okay, instead of the banks, because again, you have so much red tape, all right, and it'll just stress you out and discourage you, all right. So that's the reason that I'm telling you that, all right. Now, here's another thing. I get calls, people saying, well, I want to start an import-export business. Now, they have the SBA Express Export, okay? And with their export business, they actually guarantee up to 90% of the loan. Up to 90% of the loan that they will guarantee. So if you're in the export business or import business and stuff, this may be a great option for you. Okay? So it's definitely one of those things that I would not tell you to just overlook or whatever. You don't have to do that. Now, here's something I want to also talk about. Like I said, now that we've talked about the SBA Express loan, here's another one that may be easier for a startup. And that's talking about the micro loan. Now, in terms of the micro loan, again, you may have a credit score of 575, right? But again, with the SBA looking at going to a nonprofit, if you go to a nonprofit, they may look at other resources and assets that you have that will overlook that bad credit score. You may have a cosigner that may have decent enough credit or assets and stuff that you may consider using. Now, in terms of the microloans, they go anywhere from 500 up to 50,000. All right. Now, if you're getting a loan less than 25,000, you may not have to do a personal guarantee. All right. And I'm not saying for sure, but sometimes it's like that. Again, it depends on the situation and the financial institution. Now, here's another thing that you also have to understand in terms of what you can use the money for. All right. So in terms of what you can use the money for, you can use it for inventory, working capital, startup capital. So with the microloans, you can use it for those purposes. All right. So there isn't too many restrictions in terms of using the SBA loan to actually help you build a business. Now, if you're self-employed or home-based business, you can get the microloan. Okay? A lot of people think that, I have to be a franchise or I have to have a physical building and things of that nature. You don't. So you can actually be self-employed or a home-based business. So say that you are doing a pressure washing business or landscaping business, things of that nature, then yes, a microloan may be leveraging. Now, at the same time, as I was mentioning, the average loan, here's the thing about it, the average loan of a microloan, all right, is usually about 13 to 14. That's the average. All right. So I know it's not a lot, but at the same time, something is better than nothing. Okay, and it just depends on what it is, the purpose of the loan. All right. So that's some of the things you have to understand. Also, let me tell you something about SBA loans. They do have if you have a certain high risk type of business, okay? If you're in the adult industry, and it's crazy because like within the adult entertainment industry, strippers and stuff, they got PPP loans. They got the EIDL, but they said that's a high risk business. Don't understand it, but hey, it has happened. Strippers actually have got PPP and EIDL. So you're like, okay, well, what's a high risk? So I guess like with credit repair, MLM type of businesses, they're definitely on that list of high risk type of businesses, okay? So if you have something similar to that, or you're in that arena, that may be a reason that if you applied for an SBA loan for your startup in the past or something like that, that you had been denied, okay? So you just have to keep this stuff in mind, all right? So with that being said, I want to talk about other lenders. So if you can't get an SBA loan, where do you go? Houston, where do you go? Houston, we have a problem. I can't get no money, so help me find some money. So Houston is going to help you find some money. All right. Now here's some other companies that are not SBA, but they do certain lending and stuff for like SBA type of loans and stuff like that. Now, here's the thing about it. One of them is Excel Capital. Okay. Now with Excel Capital, again, they offer help you get qualified for SBA loans and stuff. They offer you business lines of credit, equipment loans. They also, business line of credit, equipment loans, merchant cash advance loans. So they offer different types of loans. Now here's the thing about it, with this lender, you have to be producing at least $10K in business for at least a year, okay, 1 year. So for the startup, they may not be helpful to you, but there is two companies that give me a moment and I'll talk about them, that are definitely focused on startups, okay? Now here's another one. It's called Fora, F-O-R, Fora Financial, okay? Now, with Fora Financial, they mostly offer short-term and merchant cash advance. Now, on their merchant cash advance, it's $5,000, okay? And you have to have been in business for 6 months, all right? That's on the merchant cash advance. Then their short-term loan on this, hey, STL, St. Louis. Hey, St. Louis, your boy. Anyway, back to what I'm saying, short-term loans with for financial. Here's the thing about it. With the short-term loans, they want you to be making at least 12K. All right, and it's okay to be in business for 6 months, but 12K a month. So that may be, again, that may be kind of a straining on a startup type of business. You may not be working with that type of capital right now, right? So you're still building up your base. So again, that's just a few. Now you have PayPal. Okay. Now with the PayPal, they have the PayPal loan builder, all right? Now here's the thing about the PayPal loan builder is you don't have to have a PayPal account to be able to get qualified with the PayPal loan builder. Okay? You don't have to have a PayPal account. So when you get those loan builder offers in the mail from PayPal, don't think, oh, I have to have a PayPal account. You don't have to have a PayPal account. Okay, so but here are the few criterias for that. All right, they want average about 42,000, and you have to have been in business for at least 9 months. Now, here's something. If you do have a PayPal account, business account, Now, and you've been doing business for at least 90 days, they will offer you a loan 30% of your revenue from that. Okay, so don't think that, oh, I got a PayPal account so that I'm out. No. If you have a PayPal business account, they will still help you try to get funding. And again, keep this in mind, please, that you're looking at these companies here. They're not focused on your personal credit. Again, this is the reason why I tell you all that when you're trying to build your business credit up to get business funding, that's the reason I said you can have 100 paydex score and it don't matter. Okay, it depends on the operation of the business. This is very important because a lot of people, they get stalled and they're like, well, I don't want to do this anymore. You know, it's too hard to build business credit. No, you actually have to run your business as a business. Okay, that being said, we do now offer bookkeeping services, right? And so, like with certain merchants and stuff like that, in order to get a loan, they want you to have some type of bookkeeping services like QuickBooks or something like that in order for them to actually see what you're actually processing monthly, so they can have proof that, hey, we'll give you a loan on this amount. Now, I have told you guys in the past, in previous videos, that you say that PayPal, you made it $50,000 averaging. Just say you're averaging, let's say you're averaging about $10,000 a month, okay? And PayPal says, well, what I'll do, we'll give you 30% of that, right? Okay, so that's what, $3,000. Now those same numbers, you can still go to these third-party lenders and borrow money from them with those same numbers. So you're not just stuck with one lender trying to get money, raise capital for your business, especially if you have challenging credit. Use those numbers again. That's the reason why bookkeeping is so important, for you to actually leverage those numbers. All right? So that's just a little side note so you understand that you're not just stuck with SBA loans and, oh, I got bad credit, nobody will loan me. No, it's just that you're not aware of the resources, okay? Now, that being said, here's another lender. You have Fundbox. And some of you guys, again, if you've used any of these lenders, let me know your experience. Was the interest rates too high? Was the communication bad? You know, did you have a good experience with them? Let me know. What happened when you actually reached out to these lenders with your business, with your startup? All right, with Fundbox, you said you only have to be in business at least 2 months, okay? But here's the thing about it. That when your average income to be about $50,000. For a startup, I'm not saying it's impossible, but at the same time, that's a lot of money. But at the same time, you only have to be in business at least 2 months. Now, again, they also want you to see your accounting software. So they can tap into your accounting software to see your actual payments and accounts receivable. That's the reason, like I said, we created this bookkeeping, okay? So that way you can actually have transactions and stuff to show proof to other lenders. Look, I have transactions coming through. Now, if you have more questions about it, click the link below and schedule a consultation so that I'm able to go through it further with you in terms of the process and how to leverage the bookkeeping to help you raise more funding. All right. Now, let's talk about these other two, as I was explaining to you. You have two of them. You have One Park Financial, okay? Now, they want you to be in business at least 3 months. And their income at least $2,500 a month, all right? And if you have a BK or bad credit, they're okay with that. Alright, so I'll put a link below so you can actually check them out. Again, if you're a startup and you meet these criteria, you've been at business at least 3 months and you're averaging at least $2,500 a month, even if you have bad credit, their platform is there to try to help get you the funding that you need to continue to grow. Okay, so you may have small revenue, but again, if you have enough revenue, so excuse me, it's only $2,500. I apologize for that. So it's $2,500 is all you need in order to meet their criteria. All right, so that's one. Then you have business advanced financial. I think that's it. Yeah, excuse me, business advanced funding. Now, with business advanced funding, here's something interesting about them. You have to be in business at least 6 months, right? But again, the threshold for capital making monthly is only $5,000. And again, you can have a recent bankruptcy. So that's what this is something, I'm glad I touched on this, because this is another lesson that I want you all to understand. Because there's this, I'm going to just say it how I'm going to say it. Alright? There's this lie out there that's been telling people, if you have bankruptcy, you can't get funding. And in terms of the traditional lenders, like the banks, that's true. Because with the banks and stuff like that, if you try to get funding and you have a recent bankruptcy, they used to be 4 months, okay? Excuse me, 4 years. Excuse me, it used to be 3 years. Then they raised it to 4 years, right? However, on the personal side, they'll start letting you, once you start rebuilding your credit, some lenders will go even 2 years, right? But at the same time, on the business side, if you're trying to get funding on the business side with financial institutions, they're probably going to look at maybe 3 to 4 years that bankruptcy is going to be on there before they decide to start helping you build credit. So that's the reason a lot of people, they think, oh, then I need to turn the term credit to build a business credit. No. You still need to build that relationship with the bank. So instead of taking that money and buying net 30s, net 20s, net 15s, take that money to continue making weekly deposits into your business bank account. Again, then open up a personal bank account. All right? Continue building up your personal credit and stuff like that, because that's what's going to help you build a stronger relationship with traditional lenders. But here's the thing about it with traditional lenders, like I said, they may have you on hold, but these third-party companies, although they may have higher interest rate, at least they'll be able to help you get some kind of funding so that you can continue on growing your business. If I'm doing a good job of explaining this, would you mind giving me a thumbs up, sharing it, comment, let me know. Again, have you used any of these financial institutions for funding and stuff like that? Which one of these SBA loans have you used? What was the red tape you went through? Let me know. If you've been denied an SBA loan, you know, did they explain to you why? All right? But now you know where the problem may lie with your SBA credit score. That's the reason, again, before I get off this video, please, if you're going to open up your business, the first thing you want to do is properly structure the business, open up the business bank account, and make sure you do weekly deposits. And again, if you have questions about this whole process, and also, like I said, we offer bookkeeping now, then I want you to click the link below and schedule a one-on-one consultation. This is Houston with Three-Way Funding, and for those of you that's always following me, as always, salute.